Since the beginning of the year, European stock markets have been beating US ones, and by a landslide. But now they are strongly supported by another very strong component, which is reaching its all-time highs after the tumultuous events of the weekend. It is the defense sector, which is breaking records in Europe today. What is behind this growth? Which stocks are affected, and what does it mean for the markets? European markets entered the new week with strong gains in defense stocks, after regional leaders held security talks over the weekend to boost defense spending across Europe. The Stoxx 600 regional index was already trading with a gain of over 1% in London yesterday morning, setting a new all-time high. Germany's DAX index gained 2.6% yesterday, rising above 23,200 points for the first time in its history. Among the biggest movers were German company Rheinmetall, which rose 14% yesterday, and British company BAE Systems, which added over 13%. Analysts at JP Morgan raised their target prices for both companies on Monday in response to the events of the last few days. Sweden's Saab, Italy's Leonardo, and France's Thales also topped the Stoxx 600. All of these companies have also something to do with defense. Rolls-Royce, a player in the defense and commercial aerospace industries, which hit an all-time high last week after restoring its dividend, added another 5.6% today. The price per share is already approaching the $800 mark. You can easily find out if all the mentioned stocks are at their fair price and can still be interesting for investors, or if they are already expensive on Bulios, by calculating their fair price based on DCF and relative valuation. Or you can compare them with each other in Octagon and choose the stock that suits you best. Now, let's look at what preceded this significant rise across the markets. Donald Trump shocked his longtime allies around the world over the weekend by declaring that Ukraine is not ready for peace, 3 years after Russia launched a large-scale invasion. He threatened to withdraw U.S. support for the country after a public meeting with Ukrainian leader Volodymyr Zelensky turned into a bitter row. Following that meeting, British Prime Minister Keir Starmer hosted European leaders over the weekend. During the talks, he said Ukraine's allies must step up and continue their support after Friday's explosive meeting between U.S. President Trump and Ukrainian President Volodymyr Zelensky. The UK last week pledged to increase its defense spending as a proportion of GDP over the next few years, a pledge echoed by other leaders at the summit. Germany, for example, is reported to be investing up to $416 billion in defense after the new government takes office, a fiscal operation of unprecedented proportions for a sinking Germany. Our channel has also been growing in an unprecedented way in recent weeks, so subscribe and like so you don't miss any important stock market information. On Friday, Ursula von der Leyen proposed to exempt defense from EU limits on government spending by activating the so-called escape clause. This would allow member states to increase spending without risking triggering the defense excessive deficit procedure. This is a big step for investors, who can expect increased investment and orders from arms companies on the basis of this and other information. And that is exactly what is happening now and is a consequence of why these stocks are appreciating across the continent today. Total defense spending by EU member states is expected to rise by more than 30% to $342 billion in 2024, with average spending equivalent to 2% of the NATO commitment. However, some countries, such as Italy, still fall short of this target. Into all this, markets are dealing with inflation. Eurozone inflation fell less than expected in February to 2.4%. Economists had expected inflation to fall to 2.3% in February, down from January's 2.5%. Goldman Sachs warns that defense firms will have higher cash flows as a result, but pricing will remain difficult. Europe's defense sector may be set for higher government funding in the coming years, but it is difficult to accurately value companies based on those expectations. Do you invest in European arms companies, and what impact do you think the current global situation will have on the markets in the long term? Let's get the discussion going in the comments or directly on Bulios. Good luck with your investments.